we've gone from a world where we were in branches, and in my lifetime, right, to now where we use ENBDX, right? At least I use one. And so we moved completely to the mobile. And as a matter of fact, if the bank calls us to the branch, we are surprised. And even if they ask us to pick up the phone, we're shocked, right? Regulation is moving us more and more towards, digital solutions, right? Whether that is on the back of payments becoming ubiquitous and technology oriented, or, the future CBDCs, which will come through. And there are newer technologies coming in every day, right? So we have, these days everything is about AI, digital assets, blockchain, so on and so forth. Why do we even use the word transformation anymore?
So I think it's an ongoing effort, right? You need to keep transforming. Look, this vision in our case is driven by the board, by our group CEO, Shane Nelson, by the senior executive team. We are all in it together from day one, right? So we're all committed to transform the business. And frankly, look, if we don't transform the business ourselves, somebody else will do it for us, right? So I think this idea of constant adaptation, constant transformation is very much required, Arjun. It's not something that has a beginning and an end.
I'm a consultant. We can all write strategies with all due respect. And it seems that you got to give me the reality behind this is too fixed. So let's part the regulation on the side, because that's not something you and I can influence. How do you make these 6 canvases, as you said, sort of mold together? Because, they're all interdependent in some form or the other. They're not sort of 6 speedboats, right?
Yes.
How did you make that happen? Because that's a human side to the whole stuff.
Absolutely.
So what's the sort of secret sauce out there?
So Arjun, you have to have the governance right on this one. So first of all, sponsorship of the board. I know when you're creating these separate sections, I know it could easily become silos. That is the biggest fear when you're saying that these guys are commercial bankers and they're just focused on this. And so what we did was we completely changed the structure of the bank. Under the management committee, we had 6 canvas heads, as we called them.
Okay.
And everybody was the subject specialist, and they had to work together like this, like a fist. So my message to the canvas heads was that you people, your lives depend on each other. And if we end up becoming silos, this whole thing will go the other way. So that was the human aspect, as you mentioned. So I think the right kind of leadership, selection of people, and I think the tone at the top needs to be correct. And the rest is that what I'm sharing with you.
But how much fallout did you have? Because you can never have 6 equals.
Of course.
Right? There would be one part of the business that at a given time, which is outperforming or hitting the ball out of the park. Then they start feeling like they're subsidizing the other 4 or 5. So how much of the forming did you guys have to go through? Did you have to make a lot of organizational changes? Did people have to leave? Or was it just on day one, you just had the right 6 people?
No, you're right. It doesn't happen like... I'll give you an example from the military. Right? And I think military, we can learn a lot from it, because it's been there since ever. So the signals guy knows that he's not the artillery guy. The artillery guy knows I'm not infantry. And the SSG commando knows what his job is. So what we tried to do since day one, we were very clear, this is ops, this is commercial, putting food on the table, right? So whatever salaries, benefits, whatever. And everybody was very clear about the P&L of each and every one. Plus, these canvases were at different stages of the life cycle. So the rural retail was the real bank at that time, at the back of which all these canvases had to grow. So the respect element had to be given to the rural retail who was putting food on the table. Then the Treasury Corporate Finance SWAT team, maybe 10 people, 150 billion rupees. In here, you had 3,000 or 4,000 people managing 50 billion rupees. So they were different dynamics. So what we used to do is to get everybody together, and everybody knew how they were dependent on the other party. Otherwise, Arjun, as you mentioned, it would have failed. So if you tell people day one, this is your role. If you really like to be commercial and you don't like operations, apply. But don't sit here and say that, I want something similar or same what the commercial guy is getting. So this is the tone that we set day one, and everybody worked in there were issues, of course, when you bring in people, for instance, microfinance bankers and commercial bankers and data scientists and everybody all in the same organization, because we were trying to make something very beautiful and unique. And I would say most part, numbers speak for themselves. We had scale, and to give you perspective, when we took over that bank, it was 2 billion rupees in balance sheet footing, and it touched 220 billion organically. And I'm not talking digital, it's all brick and mortar and the treasury operations. And the rest, the strategy, it's important to talk about it. Once when the digital piece kicks in, we were working on bots also on digital underwriting or AI-based underwriting. That would really reduce the human intervention for approving loans, micro loans, not nanos only. Also, that would bring in real scale and reduce the cost of.
You wouldn't suggest acquiring, or you wouldn't suggest acquiring and integrating?
I wouldn't suggest acquiring and integrating.
Yeah, and I agree with you.
Also
it
acquiring
defeats the purpose.
Also acquiring to a certain extent, because unless you are the largest bank in the country, okay, when you acquire, you're limiting, especially if it's a B2B play. When you're acquiring, you're limiting the reach of that fintech from actually working with the others. Right? So there's also that, and banks in this part of the world are sensitive to each other's strategies.
Every part of the world. Banks get sensitive. And this is, and unfortunately, it's a state of contradiction, because we're seeing open banking, which is about sharing data, but at the same time, they're saying, you're acquired by an entity, so I wouldn't want to work because you will get access to data. Well, guess what? We are getting access to that data in any case. But I'll tell you something, no names to be taken here. One excellent example I saw of an American bank was they went and bought out a wealth tech platform in Europe. Right? Yeah. They then basically swapped out their own traditional wealth tech platform with the new player.
Agreed.
But they let the wealth tech player still operate in the market.
Agreed.
Arguably as a competitor. But that view was, something, we're interested in the milk, not necessarily the cow, and fine if we compete. And I think we need to see a little bit of that.
Love it.
We need to see a little bit more of that, and I think that will accelerate the journey into the banks.
And you know what? White label it and take it to other markets. Totally. I will just give you the proof of concept, leveraging us, and we'll give you that early traction to get off on your feet, and then go out and take it. For that, I agree with you 100%.
So I think we're going to see, I personally think we're going to go through a terribly exciting period. I think there is no one version of the truth now, right?
Yeah.
I think we're going to see multiple strategies play out. I think banks will have to realize that they cannot all copy each other and all be the same, which unfortunately has been the case for a long time in a number of countries, right? And which is why we've seen consolidation. Let's talk a little bit about Tarabut now, all right? So obviously you started your journey as an open banking facilitator. You've obviously become a lot more than that, right? In terms of, you use the answer, problem solver, right? Which means you're doing a lot more than just sort of enabling open banking or access to data. I think data has just become the underlying premise of change, right? So where are you heading as a business, right? So what, and again, you don't have to divulge your trade secrets out here, but as a business, where are you heading? How do you see yourself differently than your peer group, right?
Yeah.
Because there are some fairly good players in the category that you're playing. We've seen some globally too, because some of the global peers of yours are facing certain challenges, right? They have not been able to deliver to their potential entirely for a number of reasons, which might be international. Where are you heading next?
So let's start with why we do what we do, and then I'll tell you where we are in the journey. So number one is we want to solve problems at the ecosystem level, at the community level. To be able to do that, we've drawn out our strategy. And the problems that we want to solve are the biggest problems that a community or an ecosystem fails to address. And the question we asked ourselves is, first, how do we solve that? Which brings us to how we're structured as an organization. Tarabut is structured in 3 business units. One that does banking as a service, helping the banks externalize their APIs and on those strategies. The second is Tarabut Data. And Tarabut Data is really how do we build data products, which is where most of the peers are playing. And in that, our differentiator is really, again, we build for purpose. Is we are building to address financial literacy. we are building to address financial inclusion. And these are things that are very dear to our heart, and we choose our partners whom we power accordingly.
Is there enough of a network coming around between you founders, co-founders, owners? Doesn't matter, crypto native, non-natives, whether they are. Because I actually cannot see, unless you guys don't all come together, I think you're just delaying the inevitable and sort of creating more confusion, right? Because, and then, or you, worst case scenario, you land up with a set of regulations, which is sort of a halfway house between where you guys want to be.
Exactly.
How do you see, and again, maybe this is a crystal, I always say a crystal ball and regulation are two sentences which shouldn't be in the same sentence. But here I'm going to put it. What's the Nick crystal ball on how do you see regulation evolving, and how do you see that catalyzing greater volumes from the institutions, corporates, financial institutions, however you want to define them? Right. Taking a greater, if I may say, interest in what you guys do.
It makes sense. My preference for a regulatory approach is a regulation that focuses on outcomes rather than really trying to dictate how you're going to do something. In crypto assets, there is so much development in so many different directions, it is almost impossible to keep up. I mean, that's part of the appeal. There is a lifetime to learn here, and the universe is expanding faster than I can read personally. So I think allowing that flexibility by setting the outcomes. What do I want you to do? I don't want you to lie, I don't want you to cheat, and I don't want you to steal. Here's a little bit more detail on how to achieve those outcomes as the regulator, interpret them. And then I think we'll start to see more and more banks start to create, as Standard Chartered did, a sort of center of excellence. So rather than having lots of different projects popping up like mushrooms all over the group, you try to bring it into some sort of central cohesion, and that way you can, give it a bit more direction, a bit more control. They will hopefully speak to people like us, and to an extent we can sort of share the playbook a little bit and just explain, some of the ways that we did things. And that, yes, it might create some competition in a way, but it will grow the pie. And I think at the moment it's more important to grow the pie rather than try to keep people out, make it into some sort of private members club or something like that. You want to try to democratize it, if you like.
I think you mentioned microfinance. I think before we started the conversation, you mentioned something very interesting about what you're doing in payments. If I was to sort of look at, the next sort of 3 to 4 years, or whatever horizon you're comfortable with in terms of RAKBANK, what are you building out there? So what are the interesting things you're doing as a bank?
So culture, I said, so I won't go back into it. I think we are aiming to be the most personalized bank in the UAE.
Okay.
Right. So we want to digital transformation for me seems pretty old and archaic now, right? I mean, if digital is transformation, then why do we exist?
But as if someone says a digital bank, I'm like, JP Morgan's technology budget might be greater than the top 100 fintechs put together. So I think we're all going towards that.
So I think that will happen, right? I think we feel genuinely a lack of personalization here. I think there is still a lot of hard sell, particularly in the retail sector. So we want to become the most personalized bank in the UAE. And I think we want to become, it's an aspiration. We may not get there. I know many other banks have the same aspiration. We want to be the undisputed leader in brilliant customer experience, right? Some of that will happen through technology. Some of that will happen through data. A lot of that will happen through our people, right? And I think we're building that. So that's if you ask me what cuts through the organization, it's personalization and experience. Then you look at your portfolio of what you're doing. So we have 4 or 5 moonshots that we are building within the company, but they run like startups. But the good news is that, they don't run out of funding, or at least but we actually evaluate them like startups.
Yeah, that's what I was going to say.
So we give them a series of funding, we let them alone, they come back, then we say, okay, and we have a board strategy committee which does that as well. So we get them bite-sized funding. They come and show us progress. If it's promising, we let them go to the next stage. So we are building some stuff. Some of them are out there because they've now gone public. So Skiply is a great example that we are building on. Many are sort of still in the incubation stage or the build stage. So we think that we will come up with newer business models and new things that we don't do today that will also happen. And the third thing that we are building is building a very solid corporate bank, right? So we were, as you rightly said, we were more a retail and a micro SME bank. We have been building our treasury capabilities. We have been building our corporate bank capabilities. And now I think, our corporate bank assets are almost as big as our business banking assets are. So we're doing that. And we always continue to look out for, we are a UAE-based bank, what are opportunities that we look at outside UAE as well. But again, nothing concrete now, but we always keep exploring.
I'm conscious of time. I have two segments or two parts, two questions, one to leave. We all talk about the positive side, the opportunity. Right now, the macros are very, very favorable. There's more technology. Banks have more money than arguably ever before, relatively. What are the few things you need to be careful about as banks today, right? Which could sort of lead to an existential event, right? Which could be for the whole sector or a particular bank. Your thoughts on those?
Yeah, so I think. Listen, the couple of things which I think I run through every bank CEO. One is your data privacy and cybersecurity, right? Cloud is here. UAE naturally with the regulation, all the data has been brought back into the country. People have on-prem, but everybody is vulnerable, right? So you have to always stay ahead of the curve on that. And I think that's something that, again, goes back to trust. It goes back to reputation. And that's very important. It takes a day to break it. It takes decades to build it back. So I think that is there. Credit risk and overextension of credit risk. Although I must compliment the central bank that they have brought in a lot of regulation. And again, is also in the customer protection framework, there's a lot of regulation. But whether you are a large corporate, whether you are an SME, whether you are an individual, in this boom cycle, it is very easy to overextend, right? And I think banks have a responsibility to not sort of let you overextend, but also be the right partners and tell you how to be financially literate. We were just having a session in the afternoon on financial literacy. Even in the US, they say the financial literacy is at 34%, right? In UK, I think it was at 31 or 32% a few years ago. So financial literacy leads to overextension, leads to wrong decisions, then leads to bad outcomes in a down cycle. So I think from that perspective, overextension of risk and ensuring your data privacy and your cybersecurity would be the two things I would worry most about.
Your goal is to become a financial super app. You obviously are. The concept of a super app means you serve multiple needs of multiple segments through multiple products and services, right? How do you make it all hang together, right? Because you have a consumer like me wanting a BNPL product.
With a thread. With a thread. That's how we keep it hanging on thread. So basically, it hasn't been easy. And there was a learning curve putting it all together. And we really started doing a ride-hailing business and a delivery business that we launched in 2018 and we aborted in 2020 or the beginnings of 2021 once we established. And during that period, we really shifted from super app to financial super app. We developed our core banking software, Neuron, that was designed to be able to customize different financial services on it. And we had an e-commerce platform. And once we started selling on credit, the e-commerce platform, we saw a huge uptick. And that was a further confirmation that access to credit is an important vertical in putting it all together. After the next step was to get into payments. And we got a license from the Central Bank of Egypt to do a mobile wallet that currently has maybe $100 million monthly throughput on it. And we later got approval for a card as well that's very, very recently, and that it's just been launched. And the next step was to provide other financial services, whether investment, saving, buying gold, money market funds. And once you provide the customer with access to finance, investment, payment, then I think you have the basic triangle. Add to this a game that is really to acquire customers, an e-commerce platform that's targeted with specific products for this segment. So it's not going to be, this is not going to be the game changer. And that's why the focus is financial super app.
What's your position on CBDCs? How rapidly do you see them coming through? What sort of use cases do you see being adopted? And what role do you see the private players playing, if any, in this sort of future world where CBDCs become a part, I don't know, but maybe become a part of the ecosystem?
Look, I think it's a very interesting question, and it's probably a very valid question in the context of a multipolar world that we live in today. We're not going to get into that, but I'll tell you what we're seeing. I'm not going to make any predictions on this. It's very hard to make a prediction on this space, to be honest with you, but at the same time, I can see the amount of friction happening around the kind of the unanimous adoption of such a concept, at least far from unanimous. But two things that we've seen. One is when we talk to many of the central banks who want to explore the concept of CBDCs, first of all, it's usually them coming to us, not the other. We're not trying to push that concept. They come to us. We fail to understand, they fail to articulate actually what they're trying to solve for many of the times. The few times where we've seen it, it's been kind of working as a pilot. I'm sure everyone has seen it. It's around B2B flows, maybe G2B or B2B or G2G flows. And it's been very specific across a few corridors, very strategically, very nationalistic agendas, makes sense. But then a lot of times you have to look at also the sort of balance of trade between these two economies. How much would it make sense? You know, like say, I struggle to understand how it would make sense, for instance, in the context of UAE, India, where the balance of trade is completely in favor of one party. So it's not yet clear to me. I understand the nationalistic strategic imperatives that are driving these discussions. I'm still yet to see a, let's say, scalable use case. And when I say that, what you can take away is from a MasterCard perspective, if it doesn't scale for us, I'm not trying to undermine it, but it doesn't matter because we are a global player. We need to be able to adopt and sort of scale innovation. It doesn't make sense for us to do one-offs.
And that legitimacy with the regulator comes much more faster if there was a large established bank which says, you know something, I want to work with, let's say, for example, Arjun's startup, which is doing KYC.
Yeah.
Do banks really appreciate the position that they are in to help the development of this ecosystem? Are they playing that role? Are you seeing that any evidence of that happening in Egypt?
Yeah, I think they realize that. I mean, banks are investing like hell into.
Are they?
Yeah, absolutely.
Excellent. Okay.
But it will take time. Mm-hmm. But it will end up that there are smaller technology as it was. Okay, but in a different format. Okay. So all the time, banks were using developers and software companies, blah 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 blah, and big software companies, mm-hmm. and okay. So I think my vision is that it will end up that you have 2 or 3 big startups that turned out to be big companies on a standalone basis, okay, and you will have many that are part of a banking ecosystem, which means you will add 3 or 4 players that are specialized in other areas, but it will not be 100 startups providing financial services. And I would claim that this will be across the region. And I have been visiting Saudi, and I met many of the players. And still, I believe that what will happen at the end of the day, it will be 3 or 4 big guys, and some companies that are more tied with banks. And this will be the new ecosystem.
Mm-hmm. No, I think the jury's out.
The type of offering is different, and we have to realize that the type of offering is different everywhere. You hear SaaS everywhere; it is SaaS. Everywhere it is cloud. Mm-hmm. Okay.
Everywhere it's embedded finance.
Yeah. So everywhere it is embedded finance. Yeah. What I'm trying to say that it does not necessarily mean that you would acquire the customer. so that you are good. Okay, and you have to go to the old days actually and learn from the Chinese and Japanese. Okay, that although the brand is, I don't know, Apple, or the brand is Nike, or the brand is the inputs, OEM. I recall the word OEM.
OEM, yep.
Okay. So I think the dynamics will work like that, because unless you are really disruptive, you are just faster. Okay? Mm-hmm. And it is not easy to say, I'm going to have 1,000 disruptors or 100 disruptors. Okay? But it is much more easier to say, I'm going to have 100 companies that are more lean and faster and can deliver to the quality better and can deliver in a different business model. They are not licensing the software. It is being offered in transaction base. It is being offered per customer. It is being offered blah, blah, blah. And this creates, actually, it creates a more integrated ecosystem, because it puts everybody in the same boat. And this is important, because if I give you, coming from the software industry, I license to you, I don't know, a card management system for $200,000. Okay, and then I take 10% or 20% license fee every year. I'm missing on the long tail. I'm missing on the opportunity, which means that the next time you upgrade, I'm going to try to recover what I missed. Okay, but if you put it the other way around and say, you know, Mr. Bank, I'm going to take only 10% setup fees, and I'm going to take £1 per transaction. Okay, it means we are fully aligned. It means that I am careful to grow the business with you, and I'm not in an opportunistic mode, but rather in a partnership mode.
Mm-hmm. So commercial models become...
So the commercial models become more sound for everybody.
Yeah, it does.
And it creates value much quicker.
Yeah, and I think that's important. I think in every set of the business, every types of businesses, even in the world I come from, which is consulting, I think there is a shift towards what we call value consulting, which is, you know, take a cut of the value that you create rather than anything else.
Absolutely.
So in that context, so let's just take a few of those hypotheses that or those suggestions that you've made, Ashraf, which is, you know, we're going to see some proliferation. We're going to see a number of new kids on the block. You know, some of them will be, you know, remotely arrogant, because I can give them that, because, you know, they come up with new ideas, they have enthusiasm and so on and so forth. But at the end of the day, you're going to see certain consolidation and the emergence of a handful of big players. That phase in the middle is going to be, if I may use the term, dog-eat-dog, right? Because people are going to compete like hell. And the truth is, the vast majority of them will compete on speed, because true differentiation is hard to achieve 50 times over.
Absolutely.
Right?
Absolutely.
At the end of the day, there's only so many ways to differentiate yourself. So what is the state of competition right now in Egypt? Is it actually working against the ecosystem? Is it at the right level? Are people really understanding that this is not always the fight to the bottom? Because, you know, that's another problem that you have with the startup world, that everything becomes the fight to the bottom.
We are in the pre-consolidation phase.
Right.
Okay. And I expect many consolidation will happen. Okay. And so, you know, I mean, we have, when we started this model, like tens of companies, we will do the same. We'll do the same. We'll do the same. Many of them are surviving till now, but they will consolidate. Okay. So I think we are in a pre-consolidation phase. And I think that the negative role of the VCs and the money is vanishing. And they are starting to have serious discussions rather than serious presentations on the table. And this will make everybody think differently. And this is happening now, okay? All startups that used to be after growth are after positive cash flow, because they know that the next round is not cheap, okay? Or people that were thinking about opening in 9 countries are rethinking now. So I think we are in a very good situation right now, whereby successful smaller businesses will consolidate, businesses that have no value will go out, strong businesses will continue growing, money will come to grow serious businesses, banks, people will start speaking more reasonably. So to the contrary, I'm very optimistic about the future, and I think there are lots of opportunities, more than even we can digest. Okay, but what is important and what will happen is that people will realize we cannot all eat from the same plate exactly.
Your product development process is arguably, I guess, customer-led. It's simple, it's iterative. You're introducing new products. You obviously have product, I guess, lifecycle management, because as you said very correctly, if your existing offerings are not still being liked by your customers, the chances that your new products will have any adoption are less, right? Having said that, your ecosystem gets more and more complex in terms of the range of the offering. I'm not suggesting it gets complex in terms of how your technology is architected. That I'll leave to you, right? My question here is, how are you then managing existing products? And I'm assuming you're looking at individual products and their own profitability and their own NPS scores or whatever else. And then at the same time, you're introducing new products. So how's the organization designed to sort of keep up with this scaled growth? And you can't be a startup anymore. As you said, you have 70% of, I guess you might have 100% of the addressable audience, because there are kids who might not be ready to use apps, and there's always a percentage which doesn't use mobile devices. So you might actually have 100%.
Our app is so simple, even kids can use it.
Even kids can use it. Okay, no, I was going to give you say that maybe you have 100% penetration rate, but okay, well, we have 70% penetration rate. So how are you organizationally, I guess, organized, if I may say, in terms of managing lots of products, driving them, adding new products?
Well, there are a couple of things. First of all, the way we sort of work is we're trying to simplify the product as much as we can. Basic strategy or sort of explanation here is you can launch the product today with the 4 features, but if you put the limitation on yourself and your team and you say, okay, listen, instead of 4 products, I would like to pick up the most important feature, which is the most important for a consumer today, and then every quarter I will add 1 feature. So I will end up in 12 months with a product which has 4 features, but I will start with the most important feature. That actually allows you that's a huge, it's a simple concept, but it allows you to manage things really efficiently. First of all, your teams. You don't need a team that can launch 4 incredible features. You need the team which is smaller, and maybe even the team which is sort of less experienced in the new business. You should keep in mind, every business we started, we had no experience in. That's important to keep in mind. Mm-hmm. So that's number 1. So they start with extremely simple product, but then over time, they are learning about how the consumers use the product, and then they can, listening the consumer feedback, they can add the products, and this small team can continuously improve the product. So that's number 1. So simplicity is extremely important. Number 2 is consumers. Consumers don't really need 4 features. There is extremely rare situation when you are launching the product which you can dramatically simplify. So consumers are actually better off if you launch the product which is simple, and then you launch another feature, and then products are growing together with the consumer usage. So now you have 2 situations. You have a team which is growing together with the product, and you have consumers which are growing together with the product in terms of their sophistication. And that enables us to not only continuously innovate, but actually to keep an extremely simple, sort of lean organization, so that's, it's basically the across all our company, which this, I think, is important concept. Another important concept is that we're organized around the product. So every product has directly responsible individuals and also have responsible teams, which means basically different business units just pulling resources together. And every product that you see in our mobile app has a units which are responsible. It's almost like our company is almost like a gathering of startups, basically. So, of course, they would use some corporate services which they might need in terms of hiring or things like that. But in general, sort of, they have this product teams which are dedicated, and those product teams, because they have grown together with the product, because they've launched the feature every quarter. I think that's sort of, now from today's perspective, I think they're probably some of the best product people in the world. But actually, they've started some products 10 years ago. So if you grow with the product for 10 years, I mean, you can imagine how, experience you have become. But they've started really, some of our product teams were students when they've started to work on a specific product. So that's the second. So the way we're organized around the products. The third is also the way we measure. So not everybody speaks about Net Promoter Score. Some quality of the service is actually sometimes just a statement on the wall. In our case, we really take it seriously, which means our mission is to improve people's lives. And we thought, okay, that's the statement, but we always measure everything. How we can measure how we improve the consumers' lives. And the way to measure, we decided that Net Promoter Score was a good score, sort of to measure happiness of a consumer. But at the same time, this is not like what we measure, but how we measure. Some companies would outsource to the third parties. Some companies would use it just for the marketing purposes, just to be able to say something like that. In our case, we are contacting around 300,000 consumers every month, at least. And every product has its own survey. And it's a very simple question. Do you like a service? Could you rate it? If you don't like it, why? And then you would get the call from us if you don't like it. And then we'll spend time with you and you will explain to us why you don't like it. And every single interaction is actually on the recorded, and then the product teams listening those calls, sometimes participating themselves in those conversations, then they can come up with ideas. Okay, our consumers, and when we're launching the products or discussing the features, they are playing the recordings. This is how our consumer, this is how our consumer is describing in his own words the experience with the products. Because the problem and the challenge with the companies like us, they're successful, because at some point people start thinking they're smart, too smart, and sometimes they're becoming smarter than the consumers, and then they're starting to overcomplicate consumers' lives. But when you are in touch with your consumer constantly, that's the biggest competitive advantage. So the third thing is how we measure consumer feedback and how we use it. And then it goes back almost to the structure, because you have this feedback, you have specific teams that are listening to this feedback. Those specific teams know how to launch the products simply, and they're using simple language to describe them. Those innovations, consumer words, no fancy words, like super app. No, consumers want the specific service which is for their daily life. And I think this is the way that, and this is how, we have become successful and been able to innovate constantly. So we would have maybe 50 product teams now for specific products, and they basically operate like this, most of them.
And I must say, every telco has at one time or the other wanted to have some sort of a super app strategy, small or big.
I was in Turkcell at exactly that moment.
There you go. There you go.
In a way similar in terms of what is super app, what is super is standing for. It's standing for the fact that we're adding more services to our application and product, but the services which are very naturally connected to what we're doing. We are launching VPN service because that's the first request people are having in this sort of things. And we are launching some of the financial services around it. First of all, we do have a lot of payments in crypto already. So we would like to help people who are doing this with a broader range of opportunities to do it. And we are, at the same time, we see also a lot of fiat payments done throughout the global payments, which again, if you would think about a regular top-up opportunity for your phone, if you are not on postpaid and you are in a different country, it's a nightmare. There are special companies who are doing millions just by
and
doing this.
Just facilitating
service.
payments,
Exactly. So
I can see payments as a natural extension. Yeah, I appreciate it. But you mentioned crypto, right? I'm very interested to say, what do you mean by saying extending the crypto offering?
No, I mean, we already have payments in crypto. So we accept crypto payments. And for those people who would like to still continue paying us in crypto, not regular fiat money, we would like them to have this opportunity in a faster way to have credit available with us to do the payments.
And so you accept a very wide spectrum of coins. And is that you use a third party to help?
Third party.
Okay,
we are using third party for that.
Right.
Yeah. So because also for the financial services which we will be integrating will be third party services. So we are not going there ourselves. We're not developing.
Sure, makes perfect sense. Yeah.
Yeah, we are even in negotiations with one of the very big players here in Dubai in the finance sector to also integrate them or integrate us to their services. This is always a question mark. So that's the super is standing for. You sort of come and you have more or less those which are nearby usage things.